Okay guys, Tuesday the 5th of December, and I've just been triggered into a short position on the FTSE 100. So we're continuing on with the cautious trading approach that we have been doing for the past few weeks. So for these trades I am risking £300 on the setup. Now with this move that we've had today, the FTSE has broken up into a strong level of resistance which we tested yesterday. Now the thing that I'm really looking at is that we have pressed up into this what is key resistance. However, we've also broken up above a relatively strong, let's just zoom out so you can see this, trend line which has been identified on the 5-minute time frame. So that is a bullish sign on the market. So what does that mean for the entry? Well, the first thing is the actual entry set up perfectly in accordance to the trading plan, and when that happens, you really don't want to start second guessing. You don't really want to start getting your personal thoughts into the trade. So all I'm doing is I've entered into the setup. I'm using that cautious trading approach. So really I'm already taking an approach which is designed to protect me from unnecessary losses. Now I'm looking at the first area where if this market tests and then starts to bounce from, it's likely or it's possible that it would then move against me and reach my stop level. And with this cautious trading approach, as we've been going over, what we're looking for is just for the market to come down, test, maybe bounce around a little bit, but not come back up toward our entry and then just start to break down through. So when we get down to this level, or if we get down to this level, I will just consider the stop to be at break even. And then really, I'm considering this as potentially a little bit of a scalping move. So if we come down and test this level and we just start to break through down toward potentially these lows here, around about here, then I would just be happy to take profits. Really down toward this 7,357, which for me is a relatively strong level of daily support and resistance. So if we see the market just coming down quickly, I'm just really looking at this as a type of scalping move, as I've mentioned. And I'll exit basically between the management point here and this daily support and resistance level. So let's see how we get on with this trade. That's what I am looking for, using that cautious approach. If we come down to this level, I'm considering the trade at break even. If we start to pop back up, I will just come out at break even. Okay guys, so the market has came down. It has tested at this management point. Now we just poked down. We didn't quite reach what I was looking for a target level. However, my stop, I am considering it now at break even. If we do start to break down toward 8 points, I would just look to take profits on this trade. But let's see, we may just now start to get the bullish bounce and it press back up toward that entry level. Now as this trade was forming at 850, it started to come down and it started to react at around about 64.5 towards 65. It started to pop back up toward the entry. Now for me, I always wait for the market to give a proper test of this management point. And I know that on occasion, because I do it this way, the market comes down, just reacts a little bit above, and then it presses up towards your stop. Now, the first thing is when you're trading, there's absolutely no way to avoid losses. You know, no matter what your trading plan is, you're going to have losses. If you try and avoid losses completely, it tends to be with you doing something like using absolutely enormous stops or not using a stop at all. And then what happens is you have really long runs of no losses. Then you have 1 or 2 losses, and it wipes out all of the successful trades that you have had. So for me, I know that by doing that, I do have losses on occasion. The market just pops up and it takes me up. I also know that more often than not, by giving it a little bit more wiggle room and making sure it tests that area that I have identified. You need to spend a little bit of time identifying your area, first of all. But by doing it in that way, I know that giving it the wiggle room, more often than not, the trade still comes down and at least tests the management point, if not comes down toward the target area. So that's the way I approach it. We've seen it reacting just up above, and by exiting when it's just testing up above that level, what you're also doing is you're allowing the panic in your mind, the voice in your mind, to control your reactions rather than simply relying on price action. And when you're trading, it needs to come down to price action rather than the voice that's going on inside your head. The voice that's going on inside your head 99% of the time when you're trading is going to be lying to you. So that's all I'm looking for. We didn't quite get down to what I was looking at on this spike down. Unfortunately, we came relatively close. We may now pop up toward that break-even level, but I'm waiting for really around about 8 points. As I've mentioned, I'm just looking at this as a sort of scalping move. What are we at? We're at 9 a.m. So if we do pop down in the next sort of 5-10 minutes, that would be great. Nice early finish for the day. And Pro Real Time was actually down for a little while, so I wasn't even sure I was going to be trading today, but then I got it turned back on. It loaded back up, actually at this 840 candle, which is the signal candle. And then I got triggered in, managed to set up in time, and I got triggered in just as the market started to break down. It's also worthwhile going over, actually, we're into December now. The markets are going to start to get quieter. Probably next week, if not next week, definitely the week after. Because of that, the videos that I post up, they may be less frequent. You know, if there's no setups, I'm not going to force a trade. If the market goes very quiet, I'm not going to force a trade. I'm also moving house on the 15th of December, so I've got that to take into account. I'm going to be relatively busy throughout December. But certainly back into January, I will be doing everything back to normal. As I've mentioned, I'm most likely just going to continue on with the cautious trading approach. I'm going to up the risk just so I can do it and be happy with it, that, you know, when I'm trading my regular account, it's not making too much of a difference. Because right now, if I'm taking a trade here, let's say, you know, I win this trade, but then the next trade I take is a full position loss on my regular account. It becomes a little bit harder to manage your account doing it that way. So I'm going to up the risk, as I've mentioned, just do a fixed amount on these trades. I'll show you it, I'll just talk you through it the exact same way that we have been doing. Now, also added to that, because I know that a lot of zone traders watch this video, most likely on the next non-farm payroll, which is the 8th, so this Friday, I'm going to add up a couple of different ways to use cautious trading. I'm also going to add up a slightly different way when you're entering trades to set up the trade for you guys. That should hopefully help you increase your profitability. I'll add it to the course anyway. I'll send it out as an email and you should all get that. So we've just popped down again. I don't think there's a lot of bears stepping in down here. I'm just going to continue watching it. I am considering getting out of this trade. Basically, we're just holding at, let's have a look, the 360 area. 360 exactly on that candle also. I'm just watching it now, see how we react. If we don't see a nice breakdown, I'm likely just going to come out of this trade. I'm starting to get the evidence that the bears, at least in the short term, are not stepping back in. So I really want to see it coming into this candle. Let's have a look, see if we get the 8 points. Okay guys, we are now out of that trade. It did just pop down. It was around about 7.9 to 8 points where I exited, exactly in that target level. The bears may continue to force this market down, but as I've mentioned, with it breaking up above this sloping trend line, I was happy just to look at this as a potential scalping movement. So let's have a quick look. So £195.13 on the trade. We're just at around about 8 minutes past 9, so really good morning. As I mentioned, Pro Real Time actually crashed. I wasn't able to get on. I turned it back on. This candle was forming. So thank you, Pro Real Time. You got your act together exactly at the right time. Got the entry. Market came down. Very, very simple trade into that target level, and we will call that a day. Now, I do expect there to be a live trade next week. I'd be very surprised if there's not. You know, it's only really the week after that I'm expecting the market to go pretty flat. But just in case I don't, I hope you guys all have a great Christmas, a great holiday period. You know, spend time with your family, eat too much food, drink too much if that's what you like to do, and prepare for what is hopefully going to be a great 2018 for all of you. So as always, I hope that was helpful, guys. I'm James Orr, and thank you.